This is Dr. R.K. Agrawal. Friends, what we have to discuss today, depreciation. And accounting for depreciation. Accounting for depreciation. As we know, whenever accounting takes place, it requires journal entries. Without journal, no account can be prepared. So as far as depreciation accounting is concerned, we must know what are the accounting entries. Okay. So in this session, we will discuss completely about accounting entries relating to depreciation. Okay. And before we move towards the accounting entries, there are two segments. Accounting entries on depreciation can be classified. How it can be classified? First, you have to consider the method of recording depreciation. In the previous session, we have discussed about method of recording. There are two methods. In the previous session, if you haven't watched that particular session, you may watch it. Okay. Now, I am not going to discuss in detail about method of recording depreciation. Only I would give you the glimpse, two methods. First, direct charge method, and second, provision for depreciation method. And let me summarize these two methods. What are the differences between these two methods? First method, under first method, direct charge method, under this method, each and every year amount of depreciation is credited to assets account. Okay, each year depreciation is credited to assets account directly. But under the second method, provision for depreciation method, each year's depreciation is not credited to assets account. So entries may differ. Okay. Entries may differ under this method and this method. So while you are going to do accounting for depreciation, accounting entries on depreciation, first consideration you will have to take in your mind methods of recording. By which method you are going to record the depreciation? Okay. Number two, however, it must be taken as first entry for recording purchases of asset. Okay, this is very, very simple but very, very significant, and I have seen mistakes are committed here. How many ways you may purchase asset? Can you please tell me how many ways you may purchase any asset? Cash purchases, credit purchases. Only two methods you know. How will you pay for that asset? How will you pay? How will you pay? Either in cash or through check or through draft or through issue of shares or through issue of debentures, or by giving any asset.
Yes.
Why not? Isn't it?
Yes.
So let me discuss in detail entries regarding purchase of assets. And while you are going to pass entries for purchase of asset, first of all you will have to take in your mind that the expenses incurred on such purchases must be debited to assets account, because it should be capitalized. If you have paid carriage on purchase of any asset, it would be debited to assets account. If you have paid any installation charges, any registration charges, any import duty, import tax, whatever, or any tax you have paid which is not subsequently recoverable, must be added to asset account. So entries for such an expense which is incurred or which are incurred at the time of acquisition of assets. Acquisition, what it means? to acquire an asset, any amount spent on acquisition of any asset is debited to asset account because it is capital expenditure. Is it clear now? So let me discuss about this one, entry for recording purchase of asset. However, it was very simple, but what I did, I made it complicated for you, isn't it? It became complicated. So I'm confused now, sir, what entry I should pass. I know only assets account debit, like Sunil Sethi, asset account debit, okay, to bank account. That's it, sir. I know this one. So what's wrong behind it, my dear? If you know this one, I'm saying the same. Cost of asset plus any expense incurred on acquisition of or installation of asset will be debited. Is it clear now? Is it simple or difficult? Tell me now. Asset account will be debited by which amount? Try to understand. Whatever cost, whether it is paid or not. However, it is still due, and I have purchased a camera for 5 lakh rupees. Okay. But payment is still due. Will I debit asset account or not?
Yes.
I have purchased camera on credit. I have not given any check, any amount transfer to the vendor, but I have obtained the camera and I have got it installed in my studio. Is it clear? I have got it installed in my studio, this camera particularly, and it is having a cost of rupees 5 lakh, but I have incurred an installation charges, rupees 2000. What entry will be passed for that 2000? I'm asking. Entry will be debited to assets account, and if I have paid cash for it, I would credit cash account. If I have given check for that one, I would credit bank account. If I haven't paid as yet and it is still payable to the vendor, here to vendor. Is it clear? To vendor. What I have written? Vendor. If I have purchased that asset on credit, on installment, on hire purchase, whatever it is, credit purchase, asset purchase on credit may be of two types further. A normal credit purchase. Okay. Normal credit purchase, you will pay the amount later on, after 6 months, after 2 months, after 3 months. Normal credit purchase. Yet another credit purchase is installment payment system. You will pay that money in 3 years. In installments, you will pay EMI. Is it clear? Yet another credit purchase example, this is the third one, and that is, try to understand whatever I'm saying. Is it clear to you all or not? Tell me. Okay, the third one is, I have purchased a truck or a camera or an asset. Okay, but that purchase has been made on hire purchase system. And you would ask, what is hire purchase system? I haven't heard about it before. So would you please tell me what is hire purchase system, sir? It is also a method of credit purchase and payment of which is made in installment, and the ownership is transferred at the end of the installment. Only on the payment of last installment ownership is transferred. And in installment payment system, ownership is transferred immediately. Okay. But asset account will be debited with cash price if I have purchased any asset on hire purchase system on the basis of their economic reality, and I would follow the substance over form principle or the concept of accounting. Okay. And I would record the asset at cash price even I am not the owner as yet, because I will be the owner. But the economic reality is that asset is mine now. I can use it. I can use it. Okay. So I would record it asset account debit to vendor. In all the cases, vendor will be credited. all the three types of credit purchases, which account will be credited? Vendor account. Normal credit purchase, installment payment system, and hire purchase system. I have purchased an asset for rupees 5 lakh. Okay. Whether I have paid 2 lakh in cash and 3 lakh will be payable in 3 months, no interest. Next month I will pay. It is normal credit purchase. The amount is still due. Is it possible or not? So whenever you find any question of depreciation, that asset purchase rupees 5 lakh, rupees 2000 incurred on its installation, 2000 was paid in cash, however payment was made rupees 2 lakh and rupees 3 lakh balance will be paid in 3 months. What will you do? 2 lakh you have paid, 2 lakh will be credited. 2000 you have paid, 5 lakh 2000, and 2000 you have paid in cash, so cash will be credited. That installation charges you have paid 2000 rupees, so it would be credited, but the cost would be increased, isn't it? Have you got it or not? Yes, tell me, my dear friends. Yes, is it clear or not? Yes, so what I am discussing here right now, very simple step, very first entry, in which I have seen so many students confused. They get confusion. Why? The question twists and provides that student find out, oh, what is hire purchase system? I can't understand. Payment is to be made in 4 half-yearly equal installment together with the interest of 10% per annum. So sir, what to do with the interest? Nothing to do with the interest, my dear, because you have to record depreciation and you have to go for asset record. Okay, you need not to prepare vendor account. Vendor account is not needed as far as accounting for depreciation is concerned, because you are going to do accounting for depreciation. Okay, and if you have purchased any asset on hire purchase system, so definitely interest will be called. Interest will be demanded by the vendor, because vendor will receive payment from you after a year or 2 or 3, whatever. Okay, so interest, the question of interest in installment payment and in hire purchase system, interest, the question of interest will arise. Okay, but you need nothing to worry about in this connection regarding interest. Okay, ignore interest, because interest is not the part of your cost of assets, so leave interest behind. Okay, so have you got it? What entry will be passed whenever asset is purchased? Normally, you know, asset account debit to bank, but what I have explained here, bank account will be credited when amount has been paid through check, cash account will be credited if cash has been given, and if the amount is still due, in any case still due, not paid as yet, vendor account will be credited without interest. Okay, is it clear? Interest will fall due on the next accounting period, and if on that accounting period interest will fall due, the entry for interest will not be taken into asset account, so we will ignore interest. Is it clear? Interest will not form the cost of asset. Is it clear? Okay. But cost of asset plus any expense incurred on acquisition or installation of asset. Okay. Next, I'm not going to give the reference of AS 10 here, because interest and financing charges, asset when put to use and after put to use interest. So pre-installation interest and post-installation interest, production when production begin from that particular asset, I'm not going to discuss about, because it is not under the orbit of your particular syllabus. It will come in your intermediate. Okay, and if I would discuss right now, it would be overburden for you. Okay, so right now whatever I have given, it is still overburden like. Is it clear or not? Yes, sir. Is it clear? Yes. So next various step, what will you take? First of all, what we did, method of recording depreciation, direct charge method and provision for depreciation method. Entry for recording purchase of assets, you have done it. But one thing I would like to ask here once again, if you have issued shares or debentures for purchase of any asset, what entry will you pass? Here I have discussed bank, vendor, cash. Three things. The fourth one, two, equity share or preference share capital, or two, debentures. If company has issued debentures, now it is above board to you all, because you all are class 11th students, isn't it? Above board to you all, these two items, debentures and equity share or preference share capital. Do you know share capital? As far as joint stock companies are concerned, they issue shares to shareholders, and if company purchases any asset, fixed asset, so asset increases and share capital also increases. If company issues debentures, so debenture is also a liability, so liability increases. The basic rule, you know, increase in asset debit, increase in liability credit, increase in capital credit, decrease in assets credit, decrease in assets credit, you know about it. Increase in liability, vendor is liability because you haven't paid the amount. And here, if you have issued share capital, what entry will be passed? What entry will be passed? Share capital will be credited. And if you have issued debentures, so debentures account will be credited. Is it clear? So now note it down. For purchase of asset, what entries will be passed? Note it down. For purchase of asset, entry for recording on preference shares are those which are not equity shares. Now you would ask, what is equity share? I would reply, equity shares are those which are not preference shares. And this is not my statement. This statement has been elaborated in your Companies Act 2013. And as far as the Companies Act 2013 is concerned, you know about preference shares. Preference shares are those shares which have two preferential rights. Preferential rights as to dividend and preferential rights as to refund of capital. Okay. So preference shareholders are returned their capital at the time of winding up of the company before equity shareholders, and preferential dividend are paid before the equity dividends. And after paying preferential dividend, equity shareholders are paid first. Okay, there are two preferential rights which are given to preference shareholder. That is why they are termed as preference shares. Okay, but equity shareholders are the real owners because they are having voting rights, and preference shareholders are not having voting rights. Okay. However, preference share and equity shares both are share capital, part of share capital of the company. They get fixed rate of dividend. Preference shareholders, they get fixed rate of dividend, but equity dividends are not fixed. Okay. Preference shareholders may receive arrears of dividend in case of cumulative preference shares, but equity shareholders cannot demand for their arrear of dividend. If in any year company fails to pay the dividend, they cannot demand the arrear of dividend. Is it clear? And it is included in your syllabus. You may read it. Otherwise, if you don't read it, just I have done it, the segment of company accounts, issue of share, and in which I have discussed in detail. You may watch that video. Okay. Otherwise, you may find it on Udemy also. Okay. So thank you very much. What's the transaction? Entry for recording on purchase of asset. Entry for recording on purchase of asset. Asset account debit. To bank account. Or to vendor's account. To vendor's account. To bank account or to vendor's account or to cash account to equity share capital account or to preference share capital account or to percentage debentures account. Is it clear? Is it clear? Did you know all these? A very simple thing, we are going to purchase asset. Okay, so asset will be debited, no problem. Any amount spent on its acquisition, any tax which is not subsequently recoverable is also debited. Any cost incurred on purchase of asset will be debited. Is it clear? Any amount paid on its installation will be debited to assets account. Reason, cost of assets plus any expense incurred on acquisition or installation of asset. Reason is that they are capital expenditure, they are not revenue in nature, so it will be debited. And which account will be credited? It depends upon how payment is being made, whether payment is being made or still due. Okay, so if payment is being made, bank account will be credited. If payment is being made through check or draft or via online transfer, or cash account will be credited, or equity share capital will be credited if shares are issued. If amount is still due, vendor account will be credited. Only a part is due, vendor will be credited. Whole part is due, asset to vendor. Whole part, for whole part, whole cost, company is issuing preference share, so preference share capital will be credited. And for the whole cost of the assets, company is issuing equity share capital, so equity share capital will be credited. Or some part is being paid in cash, some part is being paid through check, some part is being paid through issue of equity shares, some part being paid through issue of preference share, and some part are being issued or is being issued through issue of debentures. So percentage debentures will be credited. Okay, is it clear now? I wanted to discuss this thing with you. Is it clear now?
Yes, sir.
So two things we have discussed: entry for recording asset on purchase. Okay, entry for recording on purchase of asset, and method of recording depreciation you will have to consider direct charge method or provision for depreciation method. Is it clear now? So I am moving toward the next point. What is the next point? What is the next point? Try to understand. How would you record? How would you pass entries? You can see 4 boxes. Okay, listen to me. First, entries in the first year or in the year of purchases of asset. Point number 2, entries in the next years before the year of year of disposal of asset. Number 3, entries for purchases of new asset and for depreciation on it. Number 4, entries on the last accounting date or closure period of account. Point should be noted, I have drawn 4 segments. Okay, that is why I have taken 4 parts. Okay, and it will disturb you. But if you will concentrate and if you will divide or split the entire question into 4 segments, you will never be confused. Okay, as far as entries are concerned, as far as account preparation are concerned, and I would discuss as some of the students they have asked me that I managed to calculate, and calculation is not above board to me, it is clear to me, but I failed to put them into account. Okay, so it is very easy for me that you are able to calculate, because most of the students say that account preparation is easy for me but calculation is very difficult. I failed to calculate. And on the contrary, you are saying that calculation is easy but I failed to put them into account. So it becomes easy for me, not for you. It becomes easy for me. So don't worry about it. I will discuss both calculation as well as presentation. Calculation and as well as presentation. Okay. First of all, entries in the first year. Which kind of entries are required in the first year or in the year of purchase of assets? Simple. First, entry for purchases of, just we have discussed. Number 2, depreciation on it. Number 3, transfer the depreciation to profit and loss. Depreciation on it, I have given so many interrogation marks here. Depreciation on it, on which one? The asset you have purchased in the very first year, how would you calculate depreciation on it? And what entry will be passed for it? Very simple thing, my dear friends, try to understand. I am going to give you some technical point here. It's very simple that we have calculated depreciation. Entry is very simple, depreciation account debit to asset, if direct charge method is followed. Otherwise, depreciation account debit to provision for depreciation, if provision for depreciation method is followed. Is it clear? Yes. But no, I am not talking about this one. I am talking about the calculation of depreciation in the very first year. Why I have given this first segment here? Do you know? No, you don't know. Let me explain it. I have purchased asset on 1st of April, okay, 2020. That is COVID year. 1st of April 2020. But all of a sudden, lockdown announced by the government of India, HRD. Okay. And the asset was installed, but I was not able to start it. Even I was not able to put a switch it on. 3 months later, and as per the instruction and guidelines issued by the government of India, I managed to start the factory, and I started the production, and I started the machine after 3 months. Try to understand whatever I'm saying. Are you getting or not? Tell me yes or no.
Yes, sir.
With the help of your body language, it would be very, very soothing for me, my dear friends. Tell me, have you got it or not?
Yes, sir.
On 1st April 2020, I purchased a machinery. Yes, what's the problem? Go ahead. So, what I'm saying, try to understand. Attention, please. On 1st of April, I purchased asset, suppose for rupees 10 lakh. Okay, but I couldn't use that machinery for which I have purchased it. Okay, but I started the machine on or after 3 months of its installation. Okay, DOP, date of purchase, is very significant. DOP, I would call it DOP, date of purchase, one thing, and DOU, date of use, both are different. Is it clear?
Yes, sir.
When I purchased first 4 plus 3 months, after 3 months, just after 3 months, the factory started and I managed to start the machine. From where, which date, from which date, or from where you will charge depreciation? When actual production begins or when actual date of purchase? Actual use started or actual production begins from that asset, I would charge depreciation. Okay, so entry is very simple. Is it clear? But these are the concepts you must take in your mind, you must keep in your mind all the time whenever you are solving the question. Is it clear or not? Such types of things you will find in advanced level questions. Otherwise, simple question you will not find such types of thing. Okay, is it clear? Now transfer the depreciation to profit and loss account. Very simple entry. So in the first year, 3 entries: entry for purchase of assets, entry for depreciation, and transfer the amount of depreciation to profit and loss. Whatever method you have followed, okay, for recording depreciation, either it is direct charge method or provision method. Entry is depreciation is debited all the time. Which account is credited? Asset account will be credited only if direct charge method is followed, but provision for depreciation account will be credited if provision for depreciation account is followed. So in that case, depreciation will not be credited to asset account. Is it clear? Clear? But in both the cases, depreciation will be transferred to profit and loss account, because profit and loss account will be debited and depreciation account will be credited in both the cases. Okay, now this is the first year. Now entries in the next years, entries in the next years before the year of disposal of asset. Simple 2 entries. First, entry for depreciation. Second, transfer of depreciation account to profit and loss account. Transfer of depreciation account debit, transfer of depreciation account to profit and loss account. For depreciation, depreciation debit to asset or to provision for depreciation. I think you have got this one. Have you got this one or not? Yes. And second, for this one, profit and loss debit to which account will be credited?
Depreciation account.
Depreciation account will be credited. Is it clear? Now, entries for purchase of new assets and for depreciation on it. If any additions are made, similar case as we have done here, asset account debit to vendor to cash or bank or to dot dot dot, and in dot 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 what account will be credited we have discussed just before. Now you know about it. Okay, so any additions are made, entry will be passed similar to purchase of assets as we have done in the inceptional stages, And as far as depreciation is concerned, similar entry will be passed, entry for depreciation, isn't it? If new asset is purchased, so depreciation will be charged on it also. And what you have to keep in your mind while calculating depreciation on additional assets or new assets, when it was purchased. When it was purchased, or and whatever you can say, when it was put to use. Just we have discussed about it. So date of purchase is not significant and important, but date of use is very much significant and important. Is it clear? So DOP sorry, DOP and DOU is also both you will have to keep in your mind all the time. Is it clear? Tell me now. And now, last but not least, I would say what you have to do here, entries on the last accounting date or closing period of account. Okay. Somehow you might have seen some of the old assets are sold and new assets are purchased. And one thing, exchange of assets you haven't seen so far. So I would discuss about it later on in the next lesson or next session we will discuss about it. But one thing I would like to make you clear, first for depreciation, same as above, just we have discussed, because in the last year depreciation will also charged. For sale of asset, entries will be passed. Sale of assets, entries will be passed. Okay. So what entries will be passed on sale of assets? Cash or bank will be debited? Assets will be credited? And if there is any profit or loss? If loss is there, when will be loss? When there will be loss? When you will find loss? When written down value, what is the meaning of written down value? Cost of assets minus total depreciation up to the date of sale. Cost of assets 1,20,000, 60,000 is total depreciation up to the date of sale. So written down value is 60,000. Okay. And you have sold that asset for 55,000. So there is a loss, 5,000, and that loss will be recorded. Okay. But let me show all these things with the help of an example. Then it would be quite clear to you all. Okay. So we are having, time is not running out, so have patience and watch it. The next segment, all these in particular account. And I would take an example. Okay. Because you are finding problem in presentation of the data which you have calculated regarding depreciation, profit, loss, exchange, vagara, vagara, whatever. Okay, you have done. So let me do it. Okay. Watch this one. This is your asset account. Suppose 1st 2015 you have purchased an asset for rupees 1 lakh. Books are closed on 31st December every year. Very straightforward question I am taking, so that your concept should be cleared. Okay. 31st December 15, I have charged depreciation here. Suppose it is 10%, 10,000. On this date, what is the balance? It is 90,000. Is it clear?
Yes.
Which method I have followed here? Method of SLM? You can't say SLM right now, but which method of recording depreciation I have followed? Direct charge method, because I have credited the amount of depreciation directly to assets account.
Yes, sir.
You can see here.
Yes, sir.
Okay. Now, first 16 to balance 90,000 I have taken, and 30th 6/16 to bank, yet another asset was purchased. Such types of thing creates headache in your mind.
No, sir.
No? Oh, very good. No, it doesn't create any headache,
No, sir.
any hurdle.
No, sir.
Very nice. So now tell me, on 31st 12/16, by depreciation, tell me now, what would be the amount of depreciation if rate of depreciation is 10% per annum?
फर्स्ट का हो जाएगा 10,000
10,000?
और सेकेंड का हो जाएगा 75,000. नहीं सर, नहीं 15,000 है ना. 7,500. 7,500.
Keep your cool. Cool. COOL, cool. Okay. Imagine refrigerator. Open the door of the refrigerator, and I would not ask to put an elephant into it. What I am asking, go to the defreezer. Okay, imagine it. You will be chilled. Okay, now think over it.
10,000.
First pay depreciation 10,000.
Second पे 7,500.
Yes, of course. Second one 7,500. It's very simple.
Yes, sir.
Now balance. By balance, first one is 80,000. Second one is 1,42,500, isn't it?
Yes, sir.
How it is, sir? I am not getting, sir. What you have written, I am not getting, sir. So it was 90,000. Was it? Was it 90,000? And you have charged 10,000 depreciation on it. Okay? So 90,000 minus 10,000, will it be 80,000 or not?
Yes, sir.
And it was 150 new assets. The new assets was purchased second year, mid of the second year. And depreciation on it will be credited. Are you getting, my dear?
Yes,
Is it simple or difficult?
sir. Simple.
I'm not going to pass entries for all these transactions or events, whatever. I'm not going to pass any entries. I'm doing directly. And you will have to do directly, because you will have to keep in your mind entries all the time. And it's very simple. Any depreciation is credited when any depreciation is credited to asset account, when provision for depreciation account is not kept. And first, what I'm doing, I'm using the direct charge method, not provision for depreciation method. Is it clear?
Yes, sir.
Now asset will be reduced because depreciation has been credited, so assets balance will be reduced. Simple. So on new assets, on this one, I have charged 7,500. So it would be 1,42,500. Okay. In the third consecutive year, what is happening here? Try to understand. In the third consecutive year, we have taken balance BD 1 and 2. 1 was 80,000 and 2 was 142,500, isn't it?
Yes, sir.
But what happened to this year, third year? Do you know? No, you don't know. Sir, where is the question? I don't know. You have drafted your own question, imaginary question it is. So how can I explain anything about the third year? I don't know. But let me show you. Let me tell you. Okay. Here yet another asset was purchased. But the first one was sold out. Okay. The first asset was sold out. The asset purchased on 1st 15 was sold on 30th June 18. No, it's 17. 30th June 17. 15, 16, 17. 30th June. 30th June, the first asset is being sold out. Is it clear?
Yes, sir.
So first asset is having here. We are having the first asset written down value. The written down value of first asset is here, isn't it? This one. 80,000. When it is being sold out? 30th June. 30th June. And when it is the balance? 1st 17. So in the year of sale, still it is used for 6 months. Depreciation will be charged.
5,000.
And if SLM is here, depreciation will be charged by depreciation. How much? 5,000. Is it clear?
Yes, sir.
Is it clear?
Yes, sir.
Now, for what amount it is sold? Was sold for rupees 65,000. Okay. It was sold for rupees 65,000. By depreciation 5,000. So 80 minus 5,000.
75,000.
75,000. By bank. So still you will find that it is 65,000 plus 5,000, 70,000. And it was written down value 80 minus 5, 75. And what amount you have realized? 65. So is there any loss or not?
Yes, sir.
So on this date, 10,000 will be taken as loss. Is it clear?
Yes, sir.
Any doubt?
No, sir.
But the new asset was purchased here, and the new asset was purchased, suppose on the same date, 30th June, the third asset was purchased for rupees 2 lakh. Okay. The third asset was purchased for rupees
2 lakhs.
2 lakhs. Now what will you do? Nothing to worry about the first one. Now no depreciation will be charged because that asset has been disposed of. The first one has been disposed of. Now the second one is remaining. So depreciation will be charged on 31st 12 17 by depreciation. Amount would be 15,000 now, because full year depreciation will be charged on this particular second asset. Wait. Okay. And again on the new one,
10,000.
second one by depreciation, third one
10,000.
6 month depreciation will be charged and balance will be derived. So what would be the balance? 142 minus 15,000.
1,27,500.
Very nice. 2 lakh minus 10,000,
90,000.
will be the balance. And if you are asked to prepare assets account for first, second and third year, please note it down the question. On 1st Jan, and you have to solve it. On 1st Jan, note it down the question immediately. Please note it down. On 1st Jan 2015, on 1st Jan 2015, X Limited purchased an asset for rupees 1 lakh on 30th June 2016. On 30th June 2016, yet another asset was purchased. Yet another asset was purchased for rupees 1,50,000. Full stop. On 30th June 2017, on 30th June 2017, the machinery purchase, the asset purchased on 30th June 2017, the asset purchased on first 15 was sold for rupees 65,000. For rupees 65,000, and on the same date, new asset was purchased for rupees 2 lakh. Full stop. The company writes off depreciation at the rate of 10% per annum, 10% per annum from SLM. And books are closed on 31st December every year. You are required to prepare assets account for 3 years. Under each of the following cases. Case first, if depreciation is directly charged to assets account, second, if provision for depreciation account is maintained. Okay, my dear students, have you written it? So I would say thank you to all of you, and I would request you all to please we have discussed about the simple method when depreciation is directly credited to assets account, but you have to do and you have to practice this one. Okay, you have to practice this one, and In the next session, we will discuss about provision for depreciation method.